Economists in Nigeria have expressed displeasure over the decision of the Central Bank of Nigeria to increase the interest rate for the fourth time this year, hitting 16.5% in November. The interest rate has continually been retained at 11.5% prior to an increase in May to 13% as the CBN further tries to mop up excess liquidity. News Central's Adesewa Odusoga reports.
Of a further spike in Nigeria's inflation, which is well over 21%, has compelled the Monetary Policy Committee of the Central Bank of Nigeria to adopt a tightening stance, increasing its interest rate from 15.5% to 16.5%. The committee at its last meeting of the year expressed concerns over global inflationary pressures as Nigeria's inflation hit 21.09% in October 2022.
NPC noted that inflation has continued an uptrend, even though at a decelerating rate, despite its last three consecutive sizable policy rate hikes. NPC voted to 1. Raise the MPR to 16.5%, 2. Retain the asymmetric corridor of plus 100 and minus 700 basis points around the MPR.
Economists in Nigeria are frowning at the CBN's decision. They say that a continuous increase in the interest rate has not successfully controlled Nigeria's inflationary pressure. And then peculiar to Nigeria, they say the monetary policy alone is not enough to solve Nigeria's inflationary pressures.
Conventional economics says that increase in interest rates will discourage increased money in supply. But the nature of the inflation we are in, I do not think that interest rates will reduce inflation. Interest rates may play a role, but that role is just a necessary condition level.
The so-called inflation are actually money that are not earned through economic activities. It's not just a question of demand and supply forces. No.
There are also fears that a double-digit interest rate is a threat to the private sector, who would have to pay more to access or even service their loans. And for the financial sector, which should ordinarily smile to the banks, would have to deal with an increase in the non-performing loans.
So technically, business will have to pay more to finance their businesses. And when they pay more to finance their businesses, it will also increase the cost of doing business. And that cost, to a very large extent, will be pushed on the price per item of a product.
The impact of that is that the borrowing cost for businesses, for household, for any operation will increase. So it will be difficult for people to borrow.
This is the fourth time the committee would be raising the benchmark interest rate since May, when the rate was moved upwards from 11.5% to 13%. In July, the rate was increased to 14%, and to further control inflation, the bank increased the MPR to 15.5% in September. The Central Bank of Nigeria is advised to address the issues on the supply side to provide a permanent solution. Adesewa Odusoga reporting for News Central.